All right. Hey, good morning, everyone. Welcome to the Gimbal Financial Weekly Stock Market Update. I don't know if that's what this thing is officially called, but just decided to label it that today. And so I hope your week has been good and that you're ready to cruise into a great weekend. And so wanted to keep you updated on things here from our perspective. We cover the S&P 500, which is the largest of all stocks out there in the mega universe of publicly traded companies. And so when you think of the S&P 500, think of the S&P 500 index as a way to capture and see what's going on with business today on a global perspective. We also like to cover the S&P 600, which is smaller companies, still big, but small, definitely smaller than the Walmarts, the Apples, the Amazons, and such. These are companies that employ several hundred people, but they just don't have that global reach that maybe a S&P 500 company would have. In addition to that, we also like to cover the NASDAQ, which the NASDAQ is another index, and it's made up of primarily tech stocks, financial tech stocks, things like that. And then lastly, today, I don't have it on the disclaimer list, but today I would like to take a look at the Dow Jones. The Dow Jones is a stock index that just captures 30 stocks. And so it's one we rarely talk about on this show. However, it blows my mind how 30 stocks can have a great picture of what's going on inside of business today. So that's what's happening in our disclaimer language here. And let me go ahead and get this off the screen. There we go. Okay. Well, greetings from my desk. Rarely do we say hello from here. We're normally across the way at Keith's desk. And so Keith is on vacation this week with his family, and he's really enjoying that. Anytime you can get hang time with your family, that's always good, especially when you're going someplace special. So we're going to dive into the stock markets today and cover some of those indexes, and then I want to share with you some of the wisdom and tools and sayings that I've been building up for years, just covering the stock market and having personal interest in it. And so we'll talk about that in a second too. But here we go. Let's dive in. Okay. So hopefully we're seeing the S&P, although this is the NASDAQ. Here we go. Okay. Yeah. So this is a daily chart of the NASDAQ. And what you can see are the vertical lines, just as a refresher. The vertical lines are prices that day. So yesterday, we had a lot of movement on the NASDAQ. There was selling that took place, and we had a high of 14,360 and a low of 14,006. And so there was a lot of movement up and down. There was fights for prices on the NASDAQ, and the NASDAQ closed near the bottom of the day, which you can see here if I highlight this hash mark that goes across. And that's normally not a great sign. We like to see stock market indices, stocks, ETFs. We like to see those prices close at the high of the day. And so with this one closing at the low of the day, and it did it on an increase in volume. And if you've watched this webinar before, you know that we track price up top and volume down low. Volume being how many shares were traded. And so the sellers were definitely selling, and we had a pickup in volume. And so this type of day, we really we don't like to see too many of these. We had another one. If I go back and let's see here, this would have been on 7/20. We had another day that was similar to what we saw yesterday, right here. And that was kind of a shot across the bow that things might start to pick up and get a little more volatile, might have more swings. And so if we see days like this start to stack together, that can create some troublesome times, and we could see the stock market start to retreat towards its moving averages. The first stop would be this 21-day moving average, and we haven't hit that on the NASDAQ for some time. I mean, we'd have to go way back here into May. And so it's been a very robust, strong NASDAQ to start the year. And it was due. Oh my goodness, it was due. So not necessarily worried, but if we start to see these long selling lines pick up, and we start to add more distribution selling into the market, we'll just want to pay attention to that. So the next logical step would be if it breaks through this 21-day, and then it could retrace back to the 50, the red line here. And if it does, guys, it's really, these things happen, especially after a run up like we've seen. And so it's just an exercise in keeping in line with what is and staying patient. Briefly take a look at the S&P 500, somewhat similar, although today I am glad to see it didn't open any lower. We're staying right inside this blue line, right? You can barely see it right there. That blue mark just tells us, hey, where is it today? And currently it's inside of all the selling that took place yesterday. So that's good. That's good. We'll see what happens with it. On the small caps, pretty volatile yesterday. Same picture as you can see. This was just, warning shot across the bow that, hey, we've had a good run up. People might start taking profits. And then lastly, I said we'd take a look at the Dow Jones. Yeah, check this out. So look at this. You see all this blue right here? See that? I'll try it along. There we go. All this blue. 13 days in a row where the Dow Jones, those 30 stocks, again, that's it. Those 30 stocks, the average of those 30 stocks were moving up. That's a huge run. I'd heard it said that was like the longest run since like the late 1800s, where you saw that many up days in a row. Now, if we go down here, equally as cool, maybe even cooler because it's not reported much, as if you take a look at the volume, look at all these buying days down here. This tells us that there was strong institutional movement. This wasn't your Uncle Pete and Aunt Phyllis buying. This was strong institutions, and these institutions could have been mutual funds. They could have been endowments. They could have been insurance companies. And so several large days, buying days coming in to action right here. And that's been great for the stock market. If you look at the Dow, and I draw a line, we love to draw lines. If I draw a line across these tops, basically what you see is you've seen real strength come in here. And we just wouldn't be surprised to see it pull back to where I drew that red line, to come back and consolidate somewhere around the highs where it's been in the past. Again, not necessarily a bad thing. Now, lastly, I want to take a look at, let's look at the VIX real quick. Okay, so this is the volatility index. We talk about this from time to time. When it's lower, where it is currently, that's typically a great thing for stocks. There we go. Okay, so the VIX is well below its 50-day, well below its 200-day. And on the VIX, we like to see that. That tells us that there's just not as much swings. Whereas if we look back, go back in time here, there it is. This would have been the high, the VIX, during the COVID time period. People were pretty anxious. Since that time, and especially over the past year, we've started to come back down off the VIX. And so that's been really good to see. Now this one is very interesting. Have you heard, do you log on? How do you find stock market news? Do you hear it on the regular news shows? Do you see it online? How do you discover your news? But this one is interesting. We don't talk about bonds much, but I want to give this attention. Okay, let's switch to a daily chart. Yeah, here we go. Okay, so this is an index that shows you what's going on with the 10-year Treasury. And on this chart, it's a little different. Typically, we're looking at price when we take a look at the S&P 500 or the NASDAQ or the Dow today. But here, what we're actually measuring is yield. And so when you see this 40 mark right here where we're showing today, we're just below the 40 mark. What we're talking about is 4%, okay? And so the 10-year Treasury is back up to right around 4%. And if this was a stock setting up, you would probably know from learning in the past that we like to see movement like that. We like to see things that are trading above its moving averages, and we like to see big up days like this one. You know, this while the market sold off yesterday, the 10-year Treasury yield jumped. And so we would typically say, oh, this could be a sign of it going higher. It hit a peak of what is that, 4.09? Yeah, right here. That was yeah, just after July 4th. Over here, March 2nd, 409, 4.3 back here in October. And where you're seeing this in your own wallet is with your savings account and your money market rates. We're blown away with what money market rates are paying today. It's been good to see, especially for the savers out there. And so this is a very interesting chart, because what does it tell me? It says, hey, who is valuing our money? Who's treating it the best? Where is it getting good yield? And what does the stock market have to compete against? And so when the 10-year Treasury and your money market rates or your savings rates were paying diddly squat, the stock market really didn't have a whole lot of competition. But today it does. It's got more competition than ever when you have bonds or fixed investments paying good interest rates. And so that's been exciting to see some changes happening in the stock market, in the bond market, and the fight for your dollars. And so that's money in motion. Is there's change happening, and there's opportunities to place your dollars today that maybe weren't there a few months ago. And as we go into the future and talks of headline news on inflation and the economy and all those things start to die down a little bit, there will even be more competition for your dollars. So something I wanted to share with you. Oh, before I do, have you read this book? Keith's not here, so I thought I'd just plug his book today. This is a great book if you want to jumpstart ideas on what life is going to look like for you into the future. And so one of the things I like to do from time to time is I'll just write down my age 10 years from now, my wife's age, all of our kids' age, my parents' age, my sister's age. And I like to do that and just write it out 10 years from now. And it helps me think forward. And when I think forward, I think about things like, what do we want to accomplish? Where do we want to go? What do we want to see together? When is it going to be time to release? And this book is a great book for thinking ahead. And if you've had a copy of this and you need another one, just let me know. If you have never received a copy, we're happy to send it out to you. But it's a great book that covers chapters for getting your bearings for what the future holds, getting your bearings set. So that's a little plug on Keith's book. But let me switch gears and share some of these stock market pearls of wisdom that I've picked up over the years. Okay, so here we go. Okay, I highlighted some of these in yellow just so you could pick it up. And these are types of things that work for finance. These work for the way you see the world with your personal money, the way maybe you see your fitness, your health, but strength begets strength. I love that. You can stack strength on top of each other. And so when I see a stock hitting a new high, that gets me excited because I know people are hanging on to it and they're not selling it. And when it hits another new high, that tells me that people are on board and they want to keep what they own. They're excited about that. But the next one, it's not exciting. It doesn't need to be exciting. In 2000, let's see, it would have been 2000, I moved to Indianapolis and I was working with A.G. Edwards and Sons. A.G. Edwards and Sons, not Edward Jones. A.G. Edwards and Sons was a great Midwestern brokerage firm, and I really enjoyed working there. The technology we had was unbelievable for the time. But one of the addictions that I started in 2000 was watching MSNBC. I think that's what it was. And I'd watch these stock market shows. They were right on my computer. It was exciting. People getting on and telling about this company or that, or someone had an opinion about how high the Dow would go or the NASDAQ would go. And their whole role in life was to show up in New York and create energy for their viewers. And so I would get all ramped up about what was going on or all freaked out about what I was hearing. And it's important to remember that that's not the deal. It doesn't have to be exciting. Matter of fact, when it's a little more dull, that's probably the way to go because your head's in the game. Get in line with what is. We talk about that every week on here, and getting in line with what is just looking back and seeing a trend. If I share this real quick, switch back over, I want to show you a chart. Let's just take a look at a chart, and we're going to talk about getting in line with what is, okay? So this is the NASDAQ. Look at that. Okay, that's a move right there. Getting in line with what is. From 2009 to 2019, yeah, sure, ups and downs, but if you just took a step back, you'd say, man, that thing really goes up. Now, if we went back up to a weekly chart and we said, wow, December 2021, whoo, that was a real ride going down. We're just now starting to catch up. And so you want to be able to know what's going on and get in line with it. And you don't have to argue it back and forth all the time. You can just say, hey, this is what's real. This is what's going on. What's measurable? Can I even see it? That could be the scale at home, or that could be that could be your garage, your project. Just saying, hey, this is what it is. Let's get in line with it and let's start making a difference. Never forget this is the greatest country in the world, and we have every reason to be an optimist. This quote is from William O'Neill. William O'Neill started the Investor's Business Daily, very successful investor. The stock charts we look at on a weekly basis, that's from William O'Neill's team. Just a great friend to me and Keith. We had the pleasure of meeting with him a couple times. But if you're glued to the news, if you're glued to Twitter, if you're glued to whatever conversation your friends are talking about, odds are they're trying to ramp up emotions and talk about just the negative stuff. The negative stuff sells, but to live and operate in the United States of America is just amazing. Think of all the innovation that's taken place right now. Think of what you've been a part of with your work. It's unbelievable. Know the direction of the economy is another good one. Uh, oh, this is a great quote by William O'Neill. You'll never need a manual to operate the most successful products ever produced. It's like, I think he would talk about the iPhone and how a little kid could just, press the screen and figure out. It's pretty intuitive. And so if there are products out there that just naturally come to you, even if they're new, if they just naturally come to you, you don't need a manual to operate them. Those are going to be winning places to take a look. This is something I've remembered is when I'm building my watch list for you guys and your portfolios. Ed Carson said, build it in pencil because things change. In the day on a good note. This is one you can pass on to your friends, to your spouse, but to end the day on the good note goes back to the optimism where we get to come into work the next day, or we get to move on to the next thing and keep going forward. So I like that one, end the day on a good note. We've talked about this one already. Politics and macroeconomics are interesting. Macroeconomics have been all in the news in the last couple of days, and they're basically just noise. You want to look and follow the trends of the stock market. Money goes where it's treated best. This is a quote by David Ryan. David Ryan is a protege of William O'Neill. David Ryan's a super interesting guy. When I met him, he showed up to this stock investor conference in Santa Monica, and he's won the World Stock Championship before, but he showed up in a Toyota Prius, and I just thought that was so cool because here's a guy who has ultimate success, but he was just a normal dude. But money goes where it's treated best, and we talked a little bit about that, like with the 10-year Treasury, with the stock market trends moving up. You want to see money working in the right direction, and where money is doing that, that's best for your wallet. Let's see. Of course, human emotions, they play a big role. And then this last one by my friend Mark Minervini: all stocks are bad unless they go up. I just think that's great. So anyway, those are some stock market sayings that I've picked up over the years that I've really just come to enjoy, and they've helped keep me grounded when we're taking a look at investment choices for you. So that's about all we have for today. The last thing on my mind, as you are thinking, maybe it's 10 years out, maybe you say, yeah, I'm going to write my name down, I'm going to write my age down. One of the things that keeps going is money. Companies they don't have a human lifespan to them. And one of the neatest opportunities I've seen from just doing life with you, is when you are promoting something important to you. It could be your family. You could be taking your family on a trip or excursion somewhere. But I've seen several of you give money away, and that's been really neat. There's such a tool called a donor advised fund. And a donor advised fund, if you were to have a big windfall, maybe it was a stock from a company that you worked for and you have large gains, a donor advised fund allows you to put money into that vehicle today, get a tax deduction. It can grow in there. You could diversify it out. You're not going to pay the cap gains because you gave the gift. And then you can decide to give money from the donor advised fund to the charities of your choice. And they have to be 501c3 type charities. There's some rules to this stuff. And Keith and I, Phil, we're happy to dive in with you guys and talk about the details on it. But it is a cool tool, and it's something that we've seen several of you use, especially as we roll into the end of the year. So we're in the back half and starting to plan for taxes and opportunities. Those are things that we're always interested in talking with you. So thanks a lot for joining us today. Thanks for walking through the stock market with me. And I really hope you guys just have a great weekend ahead. I'll see you next week. Bye-bye.